Welcome everybody. This is the regularly scheduled Thursday evening Viper trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutamente in the correct place. Tonight's topic is 1 or 2 trades and done. Should be a barn burner. But before we get to some charts, we better knock out this disclaimer so keep the attorneys off our back. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Without further ado, I am going to get over here to screen 1, where I have a very nice crude oil chart awaiting us on screen 1. All right, now before I get into trades, there's some of you that are visiting this week, and I just want to take a second. This may have been explained to you, but I think it's worth taking just literally a minute or two and explaining what you're looking at here. Of course, we're connected to a data feed. In this case, we're looking at the crude oil futures, CL, which is on the September contract. Those of you that come into the live room, of course, you know we have gold. We're looking at gold here tonight. We have the Russell in the room, and we have YM. And past visitors in the room, of course, have been ES and NASDAQ. In fact, some of you might trade those other instruments and use YM and Russell as a proxy, which is perfectly acceptable. So on this 4-range chart here, we have the Viper indicators, which are the background colors, the bar colors, blue, yellow, and red, the predictors, which you see in the live room as well, right? And power meters, which is the 4 trends on the chart. Every chart has 4 different trends, short to medium to long term. And then, of course, we have our alert button here, which can turn on various alerts as to trade type setups. Now, and of course, the most prominent thing on here is the bands. So we have this notion of 1, 2, 3, 4 bands below the thick middle line, which of course is called the mid band, features prominently in our trading. 5, 6, 7, 8, 4 bands above. Line 6 is above band 6, and line 2, the red line, is above band 2, obviously. So we'll talk about that quite a bit tonight in terms of how we trade that. But I want, before we get into actual trade setups themselves, I want to sort of back up a little bit here and get some important topics right onto the chart first. So why do we think that a lot of traders, traders in general, and doesn't necessarily have to be futures, it could be stock traders, forex traders, option traders, any kind of active trader, what would you say was some of the most challenging parts of being a trader? Perhaps hindrances to potential success. Would one of them be overtrading? I might be speaking to some of you in here tonight. Overtrading. Okay, I see some good things coming in here. Let's go ahead and just get them right on the table here. Fear of loss. How about this one? Here's a good one. How about trading the wrong instrument? And when I say that, what I mean by that is that you're trading the wrong instrument for your trading personality style as opposed to how that instrument moves. So that's a challenge, right? Overtrading, fear of loss, trading the wrong instrument, wrong side of the trade. That's a good one, Michael P. How about trading the wrong trade types? Poor entries. That's a good one, Brian. So these are all potential hindrances to your trading success. And we're going to focus a lot of time tonight here on this first one, which is over trading. One of the ways to combat that, and this is really important, what I'm going to say here, and probably in the next 5 minutes, is probably some of the most important thing. If anything you're going to remember from tonight, I really would like it to be this: that your goal in the morning when you begin to trade, a very important goal to have, is to trade as little as possible. Okay, let me go back. Little in caps. Now, why do I say that? Your goal every morning should be, every trading session, whenever, if you trade at night or you trade in the morning or you trade the European session, whatever session you trade, whatever instrument you trade, is to trade as little as profitable as possible. Now, why do we say little? Why doesn't this saying be something like, try to catch all the trades that set up and make as much money as you can every morning? Why isn't it that? Why are we saying little as possible? That's the complete opposite of catching all the trades, right? Catching all the trades is that, you get phantom setup, you get deep, you got that, you got the mid band, shallow retracements, minimum criteria, you turn all the alerts on up and down all over the place. Shouldn't you be taking all those and just cleaning up every day? That's right, Brian. That's what I was just going to say. So when you are in a trade, any trade, really, that equals risk. And risk equals exposure to the market. And that equals risk of, what am I going to put in here? Starts with an L. Starts with an L. Well, it starts with an L. Risk of what? Losses. Good. So, traders, me included, tend to be a entrepreneurial and sometimes somewhat optimistic bunch. And so when we think of trading, we think of it about how much profit we can make. We always have these profit goals. I want to make $500 today. I want to make $1,000 today, whatever the number is. I want to make $250, whatever your number is. But we rarely talk about and think about losses. But the fact of the matter is, when you are in the market, you are exposed to risk, which is risk of loss. We all know that. So if we're going to trade as little as possible, eliminate fear of loss and overtrading, how are we going to do that? What steps are we going to take to accomplish this? Let me scooch this over so I can make a little bit more room for some content that we want to get on here. What are you going to do tomorrow morning to fix this? Are you going to keep doing everything that you're doing right now? Same thing? Everything? What are you going to do? What are you going to do to fix this? I mean, obviously you can just keep doing what you're doing. And, if those of you that are in here, they're, active and making money and everything's cool, well, then you might not have to change anything. Everything might be cool with you. But if you're not making the kind of money you want, or you're losing money, or you're eking out a little break-even days, you got to change something. Okay, there's some good input coming in. Good. Yeah, I wasn't being facetious about these questions. These are actual questions that we all need to think about. And so what that is as follows, is some of the two most important things to do for you is going to be to pick the proper instrument to trade. And that takes some experimentation. And you have to pick the, how would you say? I want to put favorite. No, favorite's really not the best word for that. You need to pick a trade type. Get really good at it. And only, in caps, in the beginning, I'm saying in the beginning, look for that trade. Only look for that trade. Now, some of you might be saying, look, Charles, this flies in the face of everything that you've been telling us for a long period of time. You know, you tell us to do all this, learn all this stuff, and, you know, you got all these different trade types, you got all these different instruments, and now you're telling us what? You're telling us not to overtrade and to pick one trade type and find one instrument? What the heck are you talking about? I can't tell you how many times I've talked with traders, and they'll have, you know, 3, 4, 5 charts up. They're looking at all manner of different instruments. They're trying to take every trade come along, deep retracements, shallow retracements. They're getting in counter trend trades, hope trades, and they're getting creamed every day, and they don't understand why, and they're trying to fix it. I'm just going to tell you straight up how to do it. I'm not going to mince any words. I'm just going to tell you straight up. If you want to fix it, here's what you're going to have to do. I'm not going to say the proper instruments. I'm going to say 1 or 2 instruments to trade. No more than that. If you trade more than that, it's at your own risk, at your own peril. Now, I'm not telling you you're going to lose money and get all beat up and whack-a-mole, but it's been my experience that if you take more than 1 or 2 instruments on and you're trying to learn how to trade futures, the risk of you taking losses goes up exponentially. You really just need to focus on 1 or 2. You really should just have 1 or 2 charts up. It doesn't matter what they are. It could be crude and gold. It could be the Russell and crude. It could be NASDAQ and YM. It doesn't matter what they are. But you have to pick something. And the only way you're going to really figure that out is through sim experimentation. You've got to get in there and you've got to try different instruments and you've got to find out which one that you really are good at and then focus on that one and don't trade anything else unless the volatility changes or something changes and you're not profitable anymore, and then you need to find something else. Somebody in here, and I won't say who, has typed in the words, just follow Gary. Copycat Gary. And I'm going to tell you, and I don't mean to be rude, I've been Gary's business partner for 10 years. I love Gary. He's almost like a brother to me. But straight up, that is the last thing you should do. The absolute last thing you should do. You have to be able to train yourself to see charts, see trades on your chart, know how and where to take them, and then, and only then, will you tune in to a trade call in the room to confirm what you have seen for yourself. If you want to succeed long term in the trading game, you better work on trying to do that. Because if you're just going to try to be spoon-fed and follow somebody else, even if this is as good a trader as Gary, that's a recipe for disaster. Now, all that being said, let's get on with the 1 or 2 trade thing. So when we say 1 or 2 trades, what are we talking about? Well, let's look at crude oil. Now, here's the other thing, and I'm really kind of getting sidetracked on all this discussion, but I need to go through this. And what I'm going to do is I'm going to get some of these words out of the way so then we can get on to the actual trades themselves. So I'm going to put them down here, and then I'm going to finish the word discussion part of this exercise and get on with it. How many of you have had jobs in the past that were marketing or sales jobs, or you were with a company where your income was variable, it wasn't fixed, or you had you got bonuses sometimes, or you got profit sharing, or you got some variable amount of income that would come to you outside of your regular paycheck that wasn't fixed. It wasn't like a salary, or so, or you had a job where maybe it was hourly and sometimes you made overtime and sometimes you didn't. That's all called variable income, right? Variable income. And what variable income means is just exactly what it is. It's variable. It's not fixed. So if you hire on for, $60,000, $80,000 a year, and you divide it and you take your taxes out and you collect a paycheck, pretty much from week to week, day to day, month to month, you're going to know what your income is going to be. So that's one of the fallacies about having a $500 a day trade goal. The fact of the matter is that the market might give you $500 one day, and it might not the next. It might give you $200 the next day. It might give you $700 the next day. So a healthy way to think about markets is this. And this is really important, so I want everybody to remember this, okay? This is really super important. Is the amount of capital, or let's just call it winnings from trading, is going to be different from day to day. Right? Does everybody understand that? Why is that? Why is that? Why is that? Is that true? Is this what I'm saying? Is that true? The amount of winnings that you stand to gain from trading in any given market in any given day is going to be different from day to day. Why is that? Why can't you just say, today I will make $400 and I will stop and that will be it? I will make no more, I will make no less, and this will be my day. I'm going to chisel that in granite, I'm putting my foot down, and I'm going to make that 400, and that it's it. I don't care what the market does. Well, isn't there? Yeah, there you go, Brian. That's a good. So if you think about markets, does markets, financial markets, any markets really have fixed volatility? Can you come in tomorrow and say you're going to know what the volatility for that day is going to be? No, of course you can't. Nobody has a crystal ball. You don't know. We don't. Nobody knows until it starts to unfold in front of you in real time. Now, I'm not saying get rid of having profit goals. That's not what I'm saying. You still need to have something that guides you as to when you're getting into an area where you're pretty happy with your trading and it's time to stop. That's what that's for. But the fact of the matter is, from day to day, you can't just come in there and say, I'm going to make 450 and that's it. It's going to vary from day to day. Some days you're going to get huge running days. You might make twice your goal. Some days the market is just so sloppy, so sideways, you're trying ES and you're trying to eke out a couple of ticks and you hardly make anything. So that's the healthy way to think about the markets. So don't throw out your trading goal for the day. That's not what I'm saying. I'm not saying you still have whatever, it's 200, 500,000, whatever that is. Keep that. That's a guideline as to when to stop. Now, let's get on to some more detail in regards to the trades themselves. Any questions on what we discussed here? All these topics. This is recorded, by the way. Everybody's going to get a copy. You don't have to memorize this or write this down. You can replay this video at any time when you get the copy. You can pause it here. This is the first 20, 24 minutes, and just try to put this all in your cranium. This isn't anything you just have to memorize and think about all the time. It's just like a subconscious thing. You just have to know. Is there any questions? Dr. Phil? Good. Dr. Phil says, I have been pretty good discipline and an example of this type of trading. I only trade ES, and whether it's through scalps or longer runs, I'm usually done in 45 to 75 minutes after ES opens. Well, that's good. That's here. Let's go back. Let's look at what Dr. Phil is saying. So let's tick through these real quick, and some of you can do this too mentally for yourself as you assess what you're doing on your own charts, right? He's just saying over here, pick one or two proper instruments and determine through some experimentation. Obviously, he's determined ES is for him. One instrument. Check mark one. Bing! Right? He didn't explicitly say this, but I'm guessing he probably has one specific trade type that you like. Maybe it's the midband one. Check mark two. He's saying here that he doesn't overtrade and that he has a goal that he's going for, and normally in 45 minutes or so, he is done. So he's reducing his risk and exposure to the market. And he's basically also affirming the fact that the amount of winnings from day to day might change, but you do have a trading goal and you want to try to stick to it. Shibi says, I'm a newbie and I'm learning the strategy and plan. Well, that's good, Shibi. So the last thing I want to say about this is that, and then we're going to move on and look at the one and done trade setups. Okay, so we're going to get straight away right to that next. But the CME group, in less than a month ago, I want to say it's probably 2 or 3 weeks ago, they created this thing called the micro E-minis. Okay, and the micro E-minis, let me just say what the purpose of those are. First of all, it expands liquidity in the market in the fact that you have new contracts that the margin is much lower, 1/10. So instead of $500 margin per contract, you have $50. If something moves $5 a tick, 1/10 of that is 50 cents. So the micro E-minis are really important for all of you who are looking to, let me put this in here. This is really important. The micro E-minis are important from the standpoint that for the following. Let me just quickly say this, and then we can get off this topic. They are there to help you transition from sim trading psychologically to real live money. So what I'm saying is that you know, there is a process to learn here, and maybe it's worth taking a minute to explain what that process is, because some of you are admitting the fact that you're just complete newbies and you're trying to understand this. So let's do this. Does everybody have a mental snapshot of this screen right here, so I can go on to the final topic and to start looking at trades? Yes? All right, let's go over and do one more thing. Yes? Okay, so moving on. Let's talk about the process of trading. The process of how you go from where you're at today of becoming a live trader. It goes without saying that obviously you're going to trade in sim when you start. Okay? Next, you're going to, what we talked about, right? And I'm just going to pull it all together right here and wrap it. Experiment with different instruments. And what do we say? That the end of that is pick one. I'll just leave it that simple. Pick one. Pick one or two, okay? Now keep in mind, when I'm describing as this process is moving forward, I'm talking about in sim still, right? How do you know if you're trading a instrument well? What is your measuring stick? How do you know? How do you know if you're trading well? While you're pondering the answer to that question, I'm going to say, which we said earlier, pick a trade type. And I'm just going to tell you straight up what I think you should do. You should just do mid-band trades So many times I talk to traders, and maybe I'm just not being clear in how I say things. So I'm going to make it just as clear as possible. Do only mid-band trades when you start. Only mid-band trades. Don't learn anything else for now. Just for now. Now, you're still in sim. Bullet point 3, you're still in sim. Now, how do you know it's time to transition to trading micro E-minis? How do you know? How are you going to measure yourself? How do you know? What are you going to do? What needs to happen for you to say, I think I'm ready to go on to some live money? Anybody? You have venture a guess? Anything? How do you know? What are you gonna? You just gonna wake up one day and say, well, I've been feeling pretty good about my trades lately. I think I'm doing okay. Maybe it's time to go live. Now you might laugh, but there's a lot of traders that do that, and that's how they do it. Is that the right way to do it? Let me just put the question right here. What is the measure that will let you determine whether or not you are ready to go live? Consistency, profitability, P&L, consistent trades in the green every day. Win rate is greater than the loss rate, Vivian. All those are most excellent answers. Any one of those answers, I like the consistency in the P&L and the tracking of your win rate, are all proper measures of whether you are ready. And then if you're trading equities, use the micro E-minis. Because remember what I said, okay, micro E-minis to do the transition. Because here's the thing. Everybody says this. Look, I can't make any money at 50 cents a tick. Are you out of your mind? Even if I catch 20 ticks, I make 10 bucks. That's true. However, when you get popped on a 20 tick loss, you're not losing 200 bucks. You might lose 5. Or 10. Do you think that the micro E-mini approach in the beginning, as you make the transition psychologically from sim to live trading, is the purpose of that to make money? Yes or no? 5 seconds. Are you going to be hitting your profit goals, $500 a day profit goals, trading E-minis, 1 or 2 E-minis, even if you nail a couple of winners? Are you going to be making $500 to $1,000+ a day trading the micro E-minis while you're transitioning from sim to live money? What do you think? 4 seconds. Just a yes or no. Answer. Cast your vote. Are you going to make a ton of money on the micros? Is that why they were created? For you to make a ton of money trading a micro at 50 cents a tick? No. No, the answer is no. However, the benefit is as follows. It will significantly reduce the micros E-minis reduce your losses and fear of loss. Quick story. When I first started doing this back in the mid-90s, so this is, I went to Southern California and I did some training. I don't even know they're there anymore. And I was trading stocks. This is before they had the pattern day trading rule and all the rules around it. This is over 20 years ago. Anyway, long story short, so I was trading stocks at the time, and I amassed some capital through a company that went public. And anyway, so I decided I'm going to be a day trader. So I went in and armed with all this knowledge and a computer. And of course, we don't have the screens and computers and the internet connections that we have now. It was like stone sticks and bear knives back then compared to what we got now. But anyway, so I go in there and I say to myself, man, you know what? I am ready. I am locked and loaded. I am going to clean up. So I go in and I hit the button, and I distinctly remember this. Anybody remember Xilinx? Xilinx? Remember the high flyers back then? Yahoo, Xilinx, Intel, everybody's trading all the chip stocks back then. Some of you might remember that. In a matter of, I can't even, I was in shock as it happened. I know it was less than a couple of minutes. Guess how much I was down? Just take a guess. How much did I lose in the first 2 seconds? It wasn't 2 seconds. It was probably maybe a minute and a half to 2 minutes, because these stocks were smoking. I mean, up and down. I think I bought 1,000 shares. I can't remember the details surrounding it, but I do remember the loss. Guess how much I lost in my first trade? Just put a number down. What do you think? $4,000. Bam. Just like that, gone. Just like that. You know how long it took me to get over the psychological pounding I took from that? Years. And ironically, here we are 20-something years later, and it still is a twinge in the back of my head. There's still some lingering amount of fear. I mean, it's a very minuscule, tiny little bit, but it's healthy to have some fear when you trade. You just can't be arrogant, cocky, like I'm going to push the market around. You got to be realistic. But so all I'm trying to say here is that when you get hit with losses, psychologically, it causes damage to your trading psyche. And the micro E-minis can help you get through that, right? For some of you that are trading in sim and you're just learning the system, it might seem like this is a mountain to climb, like Mount Everest is in front of you. How am I ever going to get up to where I'm making good money every day? Well, I'm telling you the recipe right here. Right here. This is it. Start in sim, pick an instrument or two, experiment with it until you find one you really like. Only trade the mid-band trades for now as you're starting out. You can add the other ones later. Don't worry about it. When you are consistently profitable and your win rate is high, transition with something as simple as the micro E-minis. Pick an equity instrument and just start off with those micros, and just start off with one or two of them. Sure, granted, you're not going to make a ton of money with one or two micros, but that's, as I said, that's not the point. You want to reduce your fear of loss so that now you're comfortable. As you transition, and let me tell you the final step. Stand by. Stand by. I need to do something real quick. Just take 2 seconds. Just stand by. Hold on. Sorry about that. All right. And so the final bullet point here, and then we'll get off of this. Spend too much time on it, but it's pretty darn important. Every one of these bullet points I covered, you might think I'm wasting your time, but trust me, I'm not. I don't want to see anybody get in a position that I was where you get slammed with thousands of dollars of loss right out of the gate, because I'm telling you, it's going to take a while to recover from that, and you don't want to go through that. You don't have to go through it. You have the technology and trading now to not do that. You have these micro E-minis, so there's instruments to alleviate that problem. Okay? Final thing is that when you achieve success with the measurements that we discussed earlier, P&L, consistently green, high win rate, etc., and you monitor your numbers and you're green almost every day, your goal actually is to get to break even first. Everybody's like, what the heck are you talking about, man? You are out of your mind. I mean, do you think that you're going to go from hardly knowing how to trade to instantly slamming it out of the park for $1,000 a morning? Or do you think that there's going to be some steps in the middle? Yeah, there's steps in the middle. The steps are, you got to get to break even first. You can't become profitable until you go through that step. So if you want to stop losses and get to break even. For most of you who are learning this, heed my words, because that is an important step right there. After you get through break even, okay, you've achieved break even with some modicum of consistency, break even then can slowly transition into more leverage, which is more contracts, sticking with the micros, and then eventually the live full contracts. Now, that might sound like a lot to go through. This whole list of stuff, like I said, this might seem like you're standing at the bottom of Mount Everest and you've got to go 25,000 feet up in the air to get to the top. Well, that's really not the case. If you're diligent and you learn your trade setups and you pick that one or two instruments and you learn them and you focus on that, put everything else aside. If you're in that room and you're trading crude and somebody makes a Russell, minimum criteria trade call, you don't care. You have to develop selective listening. You tune everything else out. I only care about crude trades. Furthermore, I really only want crude mid-band trades. Truth be told, I got to tell you another quick story. I met a friend of mine over the weekend. I hadn't seen him in years. And we went out and we had some lunch and we talked. He's a good family friend. And I said, so what are you up to? He says, you're not going to believe this, but I've gotten into trading stocks. What? And I won't tell you the whole history of the guy, but anyway, so why is that relevant? Well, let me tell you what. Here's what he says to me. He says, I trade one stock, AMD. And he says, I have a very specific trade setup that I look for every morning. One of them. I don't look for this. I don't look for that. I don't do all kind of fancy things. I don't have a lot of charts. A lot of the trading I do through Robinhood because it's commission free. So I don't have all these sophisticated things. But I have one setup. And if that setup comes along, I take it and then I let it run for as long as I can. And when that trade is done, I am done. Some mornings it really runs and I do quite well. Other mornings it hardly moves at all. And occasionally there are mornings where nothing comes along at all. And I go home with zero that day. But that doesn't matter because I have a high win rate, is what he told me. So that's what you want to do here. What's going to help you get through these bullet points, and your goal is to get to this, full leveraged live contracts, is to be like that person I'm describing to you. Pick that one or two choice setups that you want. And you know what? Let all the rest go down the river. Let's come back over here. Any questions on what I've just described here? I don't want to blow the whole evening on this, but this is pretty important stuff. Any questions before we move on here? Okay, good. Come on, let's go back here. Let's look at a couple of things. I really want to spend a few minutes looking at. Oops, got all these words all over the place. I might wind up taking these off. Does everybody kind of remember what I said here? I wind up spending 3/4 of the webinar on this because I'm going to erase all this and take it off this chart. Does anybody have any questions on anything I just talked about? This thing here, and then of course the important bullet point process steps to get you from where you're at right now to be a fully. Nope, it's all clear. I'm going to hit the erase button. Okay, cool. Delete. Gone. Now let's come back on crude and look at. I'm not going to look at the whole day and all the trades set up all day long and this trade and that trade and all manner of trades like that. I'm not going to do that. Okay, I'm going to show you one or two things that happen on crude, and they happen almost with regularity every morning. Not every single morning is perfect, right? Not every single one is perfect, and some are better than others. So we have to be ready for that, right? Sometimes we're going to get good things, so other times they might not come along. So you got to be patient. And I'm going to put the line here on this morning at crude when Gary opened the room. Crude looked like this, right before the 6 a.m. pit opened. Now, when you prep yourself, and I know Gary had a whole webinar last week on this, which is a most excellent topic, talking about preparing your charts in the morning for trading. And it's really, if you can just you don't have to do a lot. I mean, just give yourself like 10, 15 minutes, 5, 10, 20 minutes, whatever you can afford to do. Get up a little early, get everything, connect to your data source, get everything set up, your charts all ready. And then when you looked at crude at 555, it looked something like this, right? When you put your chart up. So in this market condition, this early on crude, what types of trades are you thinking about taking? I'm going to help you out a little bit while you're looking at the chart and thinking about this. This was the overnight session, chopping around all morning, up in here, right? And then you see the crude takes out support and the background turns red. I'm helping you here, right? You look at crude tomorrow morning and it looks just like this, and the background's red and things are stepping down and a lot of red bars. What type of trades are you thinking about for crude? And I'm just saying straight up, are you going to be looking for shorts or longs primarily? Based on what you see here in the pre-market before 6 a.m. Longs for L for longs, 5 seconds. L for longs, are you looking for longs or shorts? S for shorts, 4 seconds. Type in a letter. Cast your vote. Are you taking long trades here or shorts? 3 seconds. 2 seconds. L, boop. S, boop. That's it. 1 second left. Are you taking longs or shorts? Time's up. Shorts. You're taking shorts. Is this a long background? Is this a red background with red bars and bands and mid-bands stair-stepping down, breaking support that was in all night long? Is this a long or short background? Short. Until it flips and produces evidence to the contrary, you are looking for shorts. So even though the market has come down here, and it's sitting down here and it's bouncing a little bit, let me ask a secondary question related to this whole issue of whether you're short or long. If and when this market pulls back completely, where might it go to? Well, whether you had a box here at 555, I can't speak to this because, in all likelihood, you're probably just looking at the chart. I mean, could you throw a box on here? Did you get a trade? I don't know. I'm not really focusing on that. In fact, I'm just going to take that box off. What might help you on this chart to think about where your trade might set up? What if we did something like this? I mean, wouldn't you agree that from the previous trading day in the whole Asian and European session, that was a support level at the bottom of trading range, and when it broke, what might it do? Do you think there's a possibility it could come back and check that? Can you see what a huge visual thing that is to have that line on that chart? And this will be one other thing I say, and I don't say this too often. If you could learn how to put just a couple of lines on your charts like Gary does, it will make a world of difference in your trading. Watch what this market does. Okay, you're dinking around here. You don't really roll over. You're dinking around right here. 6 o'clock comes along. Here's 6:02, 6:05. So you've been looking at this chart for a couple of 5-10 minutes, right? And where does it go? Where does it go? Bam, right to your line. Just like that. I wasn't in the room at 6:02, 6:04, 6:05, but I would bet money. I bet a C note right now with everybody in here tonight that Gary called and took that trade right there. Was anybody in the room and remember that? The short setup was right there. I would bet money on it. I bet a C note with anybody that he called and took that trade, didn't he? Is anybody in there that can confirm that? If he didn't, I got a C note for you. Anybody? Some of you were in there. I know. Anybody? Was anybody in there? Does anybody take this trade? Hello? Brian, I was there. He called it and I took it. Good. Well, there's somebody. There's one person. Okay, that's better than nobody. What was this trade worth? Well, let's look at it. Let's look at what happened here. Let's say hypothetically that you used the stealth line, the red stealth line, combination with line 2 as we teach for your trail stop, and you stop out right in here. And you were filled short if you draw a region box or a limit order or a market order. Let's just put something here to have a place marker. Let's show what this trade is. You were filled short right here. 57.64. Here, I'm going to write that down. Because I can't remember anything. Well, I suppose I could just put it right on the chart. Come on, wake up. All right. All right, let's just put place marker right here. Short. 57.64. That's your fill. Just to have a number to work with. Your actual fill might have been different than that. Might have been a little higher with a market order, might have been lower with the limit order, maybe you didn't use the box, maybe you didn't. And you wrote it down here to 57, I don't know, let's use a round number, 15. So you close out your trade at 57.15. Trail, 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 you get out down here. Now let's just put that right on the chart here so we know what we're talking about. So you close the trade, the short, at, what did I say, 57.16, or 15. How much money did this trade make? Well, let's do some math. Filled short here, and you got out right there. Well, I don't know about you, but that looks like 1 tick shy of 50 ticks. So I'm just going to put that right on here. I'm going to say that short trade, and this is short trade number 1 that's set up, right? At the crude pit open, crude pit open, and the live trading room open was a plus of 49 ticks. So if you put 1 lot on it, that's 1 contract. How much money did you make? Well, 49 ticks times, what's crude worth again? Anybody remember? How much is it per tick? $10. So 1 lot is equal to $490 less commission. If you put 2 contracts on it, and there's 2 ways to do the 2 lot. You have 1 scalp for 10 ticks. You move your initial stop to 2 ticks behind your entry, and then you trail, and then you have plus the runner of the 49. So in this example, that trader made $590. The 2 lot trader who traded the whole thing for 2 lot made how much? What's 2 times 490? So you cut the whole run for 2 lot, $980. Now granted, this trade set up let's get some times on the table here. If you were filled on this bar right here, you got into it at approximately 6:05 a.m. Pacific, 5 minutes into the crude pit open. You trail, and you close out on this bar here at 617. How long were you in this trade? $12 minutes. You're in this crude short for 12 minutes, and let's just say you took one or the two with the scalp, and you're up somewhere in the $500 less commission range. How many of you would be done? Show of hands. D for done. Are you done? Do you keep trading, or are you done? So the question is, if you traded one lot and you're somewhere around 500 and 500 is your goal for the day, well, then the answer is obvious. You're done. Right? And if your goal was 1,000 or thereabouts for a type of a trading morning, and you put the 2 lot on for the full ride, you're pretty close to it. And either way, you're done. You're done in 12 minutes. So this is a gleaming, perfect example of what you want to look to do every single morning. Every morning, this is what you want to do. You want to get in, you want to get out, you want to pick the right spot, you want to take the right trade on the right instrument, and you want to nail it, and then you want to shut the machine off or go into sim. That's it. Now, look, we have traders with us for literally all over the world. I don't even know how many countries it is right now, but it's a lot of countries all over the world licensing our software over the last 10 years. A lot of them have been with us, and some of you in here tonight are listening on this recording are those traders who have been with us very long, making good money every day, and you understand this principle. Some of them trade the European sessions. They trade the currency futures, 6A, 6E, 6B. Some of them trade bonds and notes. Some of them trade the Asian session. They'll trade the yen futures, the Asian markets. It doesn't really matter what market you trade and what instrument or what time zone you're in. The principle is all the same. You want to find that optimal setup that works for you on your chosen instrument. You want to calmly and patiently wait for it to come to you. And when it does, you nail that sucker. You nail it. And when you do, you're done. You go into some, or you turn it off and go get something to eat, go get a Coke, take a break, pet your dog. It doesn't matter. You're done. Now, let's suppose that you missed this trade. Was there any other trades that came along after this? Well, here's what we're going to do. We're going to do a quick exercise because I'm almost out of time. I got 3 minutes. I'm going to do a quick exercise, and then we're going to wrap. I'm going to tell you something. I'm just going to help you. There are more trades that set up here. Okay, I'm just telling you they're here, and they're shorts. You don't even have to figure any of that out. You already know it's short. When you think of short trade setups, as I advance it from 616 forward, you type in the letter S. Okay? You ready? Here we go. Reconstructing real time on crude from 616 moving forward. Here we go. Remember, when you think the crude oil short trade is present on the screen as I advance it, simply type in the letter S. Here we go. Okay, we're just stopping out of our other trade, or you missed it. It's okay. Trades are like buses, right? Here comes another bus. You missed the 415, the 429 is coming down the pike. Right? You missed the 429, the 443 is coming. All right, here we go. 617. 618. You're looking for shorts. 620. 623. 624. Looking for shorts, looking for shorts. 624 a.m. Pacific. 24 minutes into the trading session, you're looking for shorts. You're typing in an S when you see one. Okay, continuing to advance and recreate real time. 625. Now, granted, I'm going fairly quickly here because I just took about 10 seconds to advance a bar that took a minute to build. Yes? 625. 627. So you've been out of this trade for 15 minutes. 15 minutes. 628. Okay. Let's go. Let's do that again. Let's do that exercise again. We started back here and we stopped out, or you weren't in that, and we're watching go from 618, 619 to 627. 9 minutes. Bar by bar. Bar by bar. I'm going to pause here for a second. I'm going to ask a question. Does everybody understand the concept of what a mid-band trade is? Is there anybody who doesn't know what a mid-band trade is? If there is, let me know. If there's anybody who doesn't know what a mid-band trade is. Okay, mid-band trade, I'll just help you real quick. Some of you might be just totally brand new, and that's all right. That's totally cool. It's on the bands directly above or below, or sitting directly on the mid-band itself, right here, like this. That is called a mid-band trade. And if you recall from the text that we typed in the first 45 minutes, what I told you was to only look for what? In the beginning, as you learn. This is totally, you're just totally brand new, or maybe you're just sort of a little intermediate, you know some stuff. You only take one type of trade. What is it? Only take mid-band trades. I can't make it any more explicit than that. I can't make it any more clear to only do this. Now, I haven't moved it any more than I have. Where are these bars sitting right now on this chart? Where are they? Where are these bars? I'm not angry. Don't misunderstand. I'm a little frustrated. Okay, I'll give you that. How can any of you not type in mid-band short right here? That's what kind of perplexes me a little bit. How can you not type in mid-band short when you saw these balls form right here? This, if you took a snapshot of this and put it on Wikipedia with the definition of it being, if you Googled it, mid-band short trade, this would be it. This is the epitome definition of it. Every single person here tonight should have typed in an S when these bars formed right here. Every one of you. Moving on. Now, if you'd thrown an object trader box around here, it's quite possible you were filled short on the close of this bar right here. And then it moved in your favor. You may or may not have stopped out, so that might have given you a quick scalp short because it came right to support and bounced. You might have got maybe a couple of 5 ticks. Maybe you broke even. But then where does it go again? Where do these bars go? Right there. Is that a second chance to take a mid-band short? Yes or no? Right here. Yes or no? Is this another place to take the short on crude? Right here. Trade short setup number 1 at the mid-band here. Doesn't get any more clear than that, in my opinion. And number 2, if you missed it, you could have missed this trade, and this just handed to you right here. And I'm positive we called that in the room, and I'm pretty darn sure I took it. What I'm showing you with these 2 boxes right here is the trade you need to learn. And I'm going to show you how you can do it. You toggle it back and forth, just like this. You take your chart, you go back and forth. You study it, just like this. Just exactly like I'm doing. 5 minutes a day, 10 minutes a day. You just do this. Retraces, kisses the midband. There's a midband short. Background's red. I'm looking for shorts. It kisses the midband. I'm taking a short. I'm short. Kisses the midband, takes a short. I stop out. I'm looking again. Comes right in there. Right in there. There's another one. Back and forth. Back and forth. Until your cranium, your trading mind, knows where that is and recognizes it and takes it. Very quickly. This short got filled here. I'm going to do some math. What I'm telling you, just to be so we all understand what I'm talking about here, this was your second or third chance to get a one and done trade right here. And you got filled short on the close of that bar, which would have been roughly at 57.18, and you got out here 57.79. 18 less 79 is, ding, 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 40 ticks, right? 40 ticks, roughly. $400 per contract. You took a scalp for 10, you got a 10 tick scalp off on a 2-lot, you make 1 bone, you make 4 bones on that, there's another 5 bones. And this trade ended at 6:46, and you entered it at 6:37. This lasted about 10 minutes right here. 10 minutes, $400, $500. 2-lot would be $800. That's it. Done. Done. 6:46. You're done. You shut it off. You go. You're done for the day. That's it. I mean, I wanted to show you more examples on gold, but I spent a lot of time talking about the psychology of learning how to trade and how to transition in the process, because some of you said you're new and you wanted to know that. I'm going to stop the recorder. I have to go. Thank you